Built to rent. Now, that might sound like a not so inspiring marketing slogan, but in the real estate business, it's a sector that has exploded in popularity and generated huge returns for investors this year. Let's break it down. Simply put, it refers to homes that are not put on the for sale market, but are instead held by institutions to rent out. The expected risk-adjusted average annual return this year for such investments was 8%, according to Green Street data. And that makes the single-family rental sector the top-performing sector in the entire real estate business. It also points to a number of key trends in the US housing market. Number one, home prices are at historic highs, meaning that even those who would typically have been in the buyer's market at the moment are forced to continue to rent. Number two, down payments for homes have become increasingly unaffordable for most Americans. And number three, new home construction has lagged behind requirements ever since the Great Recession, and there's still a huge gap between supply and demand. All this means that single-family rentals are hot property. Even traditional home-building giants such as Lennar and D.R. Horton are gearing a lot of their new construction towards this sector as opposed to for-sale properties. Estimates cited by the Wall Street Journal estimate that there are about 100,000 homes that have kicked off construction that are going to be in the single-family rental sector. Wall Street giants such as KKR, Invitation Homes, and Blackstone have also doubled down on the sector, and the journal estimates that about $30 billion has been pumped in this year so far, and there's more where that came from. With so much capital and excitement in the single-family rental sector, it makes sense that it's being targeted by startups, and those that have gained traction have been able to raise a ton of money at really high valuations. For example, Lesson, which connects contractors and landlords, just raised $170 million. You've got Entera, which helps landlords streamline acquisitions of such properties, just raised $32 million, and SmartRent, which deploys smart home technology in single-family rentals, just went public this summer in a $2.2 billion SPAC merger. The question becomes, of course, how long can the single-family rental party continue? There's some concern that rising land prices would squeeze returns, but the broader, more existential concern is, should the average Joe really have to compete with these deep-pocketed Wall Street-backed titans for the right to own a home? And if the answer is no, then could more regulation be coming to the sector? Let us know your thoughts below in the comments, and please give us a like and a follow on YouTube and Instagram.